Let me take it across and welcome on board the management of Tata Technologies. Warren Harris, the CEO and MD, joins us now. It was a bit of a disappointing set coming in for the company. Warren, hi, good to be speaking with you. Is the decline and the weakness that we have seen in Q1 largely on account of VinFast, or there are some other accounts as well that contributed to the decline? How would you rate the quarter gone by?
It's predominantly, as you reference, VinFast. We've now completed the transition from VinFast. We've developed the two electric vehicles for them. We're very proud of the products that they will be launching this year, and we are now transitioning the resources to other customers and to other engagements. So that's predominantly what has informed the numbers in the first quarter within services. On the tech solution side of things, we saw a material drop there, but that's in line with the seasonality in that business. The product business for us, which is a major component of tech solutions, is very much predicated upon the renewal of service and maintenance contracts at the end of the calendar year, specifically in North America. So we've seen that trend for the last 20 years. We certainly expect that to continue in the foreseeable future. So the convergence of the decline in technology solutions and the runoff from VinFast is really what has positioned the relatively flat performance in the first quarter. I think the good news, because of the completion of the transition, is that we're fully confident now of sequential quarter-on-quarter improvement through the rest of the year.
Right. And which segments are showing signs of improvement, Warren, versus the last conversation that we had with you? Manufacturing, perhaps?
Yeah, that's right. And certainly there's no deterioration of the demand environment. I think automotive has been relatively consistent for us for the last 2 to 3 years, and we see no change of that. I think one of the green shoots, as you refer to it, is aerospace for us. We're now starting to discharge the order book that we've established at Airbus. In the first quarter, we won a large deal with a business and first-class seating manufacturer out of Europe, and that's a deal that really gives us confidence that not only are we growing the aerospace business, but we're diversifying the customer base. So green shoots are there in aerospace, and we expect that to continue. Automotive is largely the same as when we spoke earlier this year.
Sure. Warren, the orders that you spoke about, Airbus, for instance, in the aerospace vertical, when do you see that fully scale up? Because you just talked about how the entire execution has started, but will it scale, let's say, by the end of FY25, or the real scale up will happen only in FY26? And a broad sense, if you can, that when you're saying that growth will come back from Q2 onwards for the entire year of FY25, what kind of growth projection should we work at? 3 to 5, 5 to 7?
I think just responding to the first part of that question, aerospace is a highly regulated industry, and so when you become empaneled with big customers like Airbus, there's a significant investment that one has to make in infrastructure and opening offices close to the facilities that our customers have, and so the aerospace business is a relatively slow burn, but there's sustainability and stickiness to it that gives us good confidence in terms of certainly the medium to long term. We expect the second half of this year to be much improved from the first half of this year, but I think the real scaling we'll start to see in FY26. I think this year will largely be driven once again by automotive, and we are discharging our order book, not just for our anchor customers, Tata Motors and JLR, who continue to increase CapEx, but also the OEMs and the tier ones outside of the group continue to present fairly healthy and sizable demand.
Sure. What are the investments that you talked about? Does that mean margin headwinds will persist?
Well, I think one of the things that you've seen in the first quarter is that despite the fact that we've had a small decline in revenue, we've been able to apply operating levers to protect largely protect margins. So I think we've demonstrated a level of resilience, and certainly our commitment is to protect current margins and to look for opportunities during the course of the year to build upon where we are at the moment. So, we'll continue to work hard, not only on the growth side of our challenge, but also on the profitability side of the challenge. And if you look at, again, the way in which we managed the transition at VinFast, where this time last year, VinFast was our largest customer, the fact that we've been able to manage that transition and still protect the health of the business on both the top line and the bottom line, I think just demonstrates the operational rigor and the discipline around which we're managing our business.
Okay, cautiously optimistic for the coming quarters. Thanks so much, Warren, for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.